All right. Did y'all see it? Did y'all see Gamestop today? Did you see the meteoric rise of GameStop stock today? Well, if you haven't seen it, stay tuned. We're going to talk about it a little bit because I've been getting a lot of questions about it. So I figured I'd get in front of it and do a video about it. So come on and meet me on the other side. What's happening, people? Kamari Ellis here, the Finance Rebel, bringing to you another video. If you're new to this channel, I talk about all things money, wealth, stock, taxes, anything that, again, involves money, business, getting to the bag. We talk about it here. All right, so today I've been getting a lot of questions. Why? Because there's a particular company named GameStop that has just been running through the roof. And not just today, yesterday as well. And it's had a meteoric rise. Rose over 90% today in trading. Now, I'm going to go over all the numbers with you real short. But to go through this video real quick, let's do some vocabulary, because what happened is a bit of an intermediary / advanced type thing, right? You probably heard everybody talking about shorting and short squeeze. So we're going to break all that down. Okay, so quick vocabulary before we really get into it real deep. All right, because like I said, we're going to be talking about shorting, the definition of shorting, the definition of short squeeze, and also short interest. So I'm going to put something up on the screen real quick so you can kind of have a quick guide to go over so you can see everything that is going on. All right, so on the screen right now, there's a definition from a very well-known website called Investopedia, right? And so the definition I have up there right now is called short selling. So what is short selling? Short selling is an investment or trading strategy that speculates on the decline of a stock or other securities prices. It is an advanced strategy, I just said that should only be undertaken by experienced traders and investors, all right? Traders may use short selling as speculation, okay? So a lot of professional people do it. So when you go down here, and you see it, that's where it really gives you the gravy, right? And short selling, a position is open by borrowing. So basically somebody borrows the stock in their brokerage account. They borrow the stock. I won't go through all the technicals behind how they borrow, but just imagine they get a stock from someone else, and then what they do is they go and sell it in the market, right? With the expectations that the stock will fall in price. And then once the stock falls in price, they buy it back. Okay, so there's some other things involved with it, but that's the gist of it. They buy it back, right? So let's say a stock is $100, right? They borrow the stock, they didn't sell the stock, they pocket that $100, and let's say the stock goes to $50. They then buy the stock back, return it to the borrower, and they pocket the $50, minus some fees for interest and things like that. Don't want to get too technical on you, but that's essentially what short selling is. And so GameStop has a lot of short sellers. All right. So the next definition I want to talk about real quick, short interest. So hold on. All right. So this new definition, short interest, right? So we're talking about the short selling. Okay. Now we're going to talk about short interest. So short interest is basically the amount of shares that are being shorted at any particular time in the market, right? And I just kind of went over the whole process of it, right? But they haven't been covered. And so when it's covered, remember when I said the short seller then sells them back, right? That's called covering. And so when you get the money back, you're covering because you're putting the stock back to the original borrower. So they check this. This is an indicator that many people use in their overall investment, right? So again, you short it, right? So you're borrowing the shares, right? You sell it. Remember we said $100, right? The stock falls to 50. Stock falls to 50. It's then brought back. This is in reverse, folks. It's brought back, right? Then when it's brought back, the seller gets the shares. They then return them to the borrower. That process is called covering or short covering. Okay. That's important. So I want y'all to remember that. All right. One more One more definition, and then we'll get right into it. One more definition. So the definition we're going to talk about next is short squeezing. Okay, short squeezing. Hold on. So now I want to show y'all short squeezing. All right, so short squeezing, right? I know this is a whole bunch of mumbo jumbo. I know I usually only stick to the beginner topics, but everybody's been asking me about this. So I said, I know more are going to ask, so I figured I'd get in front of it. Okay, so short squeezing. What is a short squeeze? A short squeeze occurs when a stock or an asset jumps sharply higher, forcing traders who had bet that its price would fall, remember those shorters, to buy it in order to forestall even greater losses. Okay. So now remember all that, kind of put that all together. Now there's one part of this trade that I didn't tell you about. I just told you about the good part. When the stock falls, that's when the trade goes the way of the investor or the trader. However, sometimes the trade goes backwards. It goes up. The stock goes up. And that's what happened today with GameStop, actually the last couple of days. But I know this is probably a little bit different for many of you who actually are new to investing, right? Because most of my stuff is geared towards the beginner investing. So here's the thing. Most people talk about making money in stock market when stocks go up. However, you can make money when stocks go down, right? So you can make money when stocks go up, and you can make money when stocks go down. When stocks go up, that's usually called a long position, all right? When people make money in the long position. When stocks go down, people make money off of that by shorting, right? It's a bit more technical. It's a bit more involved. It's a bit more nuanced, but it is a thing and it's real. There's a lot people are probably asking, well, why would you want to do that? There's a lot of reasons why. There's a legitimate reason to short. But today, I just want to talk about it because it's relevant, it's here, it's news, and people are asking me about it, how it worked with GameStop, all right? So you had a bunch of people who were buying GameStop, but there were also a bunch of people that were shorting GameStop because of everything that's going on in the environment, right? COVID's here. People aren't shopping as much. People are saving more money, right? And so some of the institutional investors, the big boys out there, said, we're going to short it. So they borrowed the stock. They then sold the stock, and they were expecting the stock to fall. But then a bunch of people got wind of this in places like Reddit and some of these Discord servers. And they said, no, we want to stick it to the man. This is this whole David and Goliath scenario. So we want to battle back for GameStop. And many people thought it was funny. If anybody's familiar with like some of the Reddits and some of the subreddits for like Wall Street bets, they had thousands upon thousands upon thousands of memes, right? A lot of memes drove this that had the stock go up in price, y'all. So, but again, a bunch of people organized in Reddit and on these Discord servers to say, you know what? We're going to put it to the man. We're going to put it to the big guy, and we're going to continue to buy GameStop. And they continued to buy GameStop. And what did they do? They ran GameStop up so much that it created a short squeeze. And in that short squeeze, the institutions had to then cover their losses, cover the shorts, because they were losing money and they wanted to stop the bleeding. So real quick, I want to show you a chart of GameStop real quick, and then we could, get into this. Hopefully, I hope I'm not losing anybody. Hopefully everybody is getting this. Again, I know it's a little bit of an advanced topic, but it's very interesting, and I really get to nerd out because I really love the stock market, y'all. So here is a chart of GameStop. What you're looking at here is a daily chart. So each one of these bars, they're called candlesticks, and each one of them reflects a day's worth of data, okay? So right here, I have the crosshairs on this day. This is January 13th. That was last week. All right. And then you see this big candlestick right here. That is today. That's what happened today. Okay. So remember, I talked about shorting. I talked about short interest, and I talked about short squeeze. So right here, you see short interest started to take off, right? So that means more people were shorting the stock. More people were shorting GameStop. All right. The stock even went up that day. More people bought it. And many folks were saying, man, this can't be true. This stock can't go above $30. Now, again, remember, I want you to keep note of this, middle note. This stock on that day was $30.91. Again, $30. It closed at it closed at $31.40. All right, it went all the way up today to $147. Even after market, it ran up some more, but we'll talk about that a little bit more. All right, so again, on January 13th, there's a spike on here that's short interest, right? We've seen a big spike, short interest. The shorts start buying, started piling in. They wanted to short the stock. They didn't believe the stock could continue to run. And these couple of days here, you're starting to see more people starting to buy in. You're starting to see people go long on this stock. And remember, I talked about all those Reddit groups. Well, they got wind of this. So they started to push the stock up, right? They started to push the stock up because you see short interest will decline. Again, I'm sorry if I'm being too technical, but we're seeing short interest decline on the 13th, right? Came down, spiked a little bit on the 19th, dropped again, right? People are starting to cover here, so they're starting to push the stock price up because those short sellers have to buy the stock back. So anytime you have more buyers than sellers in the market, you will see a spike. Okay. So people said there's no way that this is going to happen again. Right. So the short interest rose again, yet again, even at a small rest yesterday, even though it hit all-time highs yesterday as well. And then today, it just jumped. It just went balls to the wall, went to the roof. It was riding a rocket ship. And it did not stop. It got halfway to heaven, and it kept going, folks. It kept going. So now that you have a little bit more context and you could actually see what happened with this, let's talk about the numbers behind GameStop. Let's talk about what type of company it is or how strong it is. So I took some notes, so just bear with me for a second. All right. So again, y'all saw it started at $30, went almost up to $147 today. And matter of fact, after trading, it went up to about $213. Matter of fact, it touched $250 today. So it was up over 90% today. This doesn't happen often, folks. This is really a phenomenon. All right. But when you look at this company and you say to yourself, well, why are people buying this company? Does this really make any sense? Is the company strong enough to really sustain that type of investment? Let's talk about the numbers. All right. So the last time they reported income was October 30th. All right. October 31st, 2020. They reported $1 billion in sales. Guess what? They reported about $1.088 billion in losses. So they had a loss the last time that they reported income, right? And also a year before that, they also reported losses. They are not a profitable company. Understandably, COVID's here. A lot of people are not going to retail stores because GameStop's the majority of their businesses in retail locations. A lot of people are not going out. Some people are, but most people are afraid of the Rona, so they're staying put. All right. Now, they're taking losses. They only have about $450 million in the bank. Last reported. Now, they will be reporting in the next couple of days because, again, their next reporting is due out January 31st, end of their quarter. So we'll see how they did after Christmas or during Christmas and during the holiday season. So it's going to be really interesting. But the way it stands right now, the way I see it, is that everything kind of regresses to the mean. It means that what goes up will come back down at some point. How high? Who knows? But I would not be buying at the top here. I've talked to some people and they say, well, I was thinking about buying. No. If I had Jim Cramer's sell button, I would say sell. I'm not Jim Cramer though, right? We don't look alike. I'm a little darker than him. But nonetheless, I would not be buying GameStop right here. By the way, this is all for educational and entertainment purposes only. That is not a buy or sell recommendation. Please do your research. Please do your homework. Look at these stocks. Understand what's pushing these stocks, right? You can't get away from that. Now, a lot of times people want to get the hot stock tip. They want to, get a free lunch. They want to ride the wave and make some extra money. I get it, but I wouldn't touch this one. I wouldn't. It still may run, right? I wouldn't be surprised because again, all these folks on these subreddits, all these folks on Discord, all these folks in some of these Facebook groups, they're still buying. They're trying to stick it to the man. But here's what's going to happen that nobody's talked about yet. I haven't seen anybody talk about this yet. The SEC does not like turbulent markets. And if you don't know what the SEC is the Securities and Exchange Commission, right? They oversee everything. Now, we could talk about them, how bad they didn't do. They didn't find Madoff. They didn't find a lot of other stuff. However, they do not like the erratic flow of markets. They don't like them jumping. Matter of fact, there was a couple of breakers that went off today. So the markets will stop automatically when things get out of hand, whether a stock goes up too high or whether a stock goes too low. It's usually about 10%. If it goes below 10% or 10% too high in an erratic and very quick fashion. So if this keeps happening, retail investors are going to mess up the markets for everybody. Why? Because the SEC more than likely is going to come in and change some rules. I'm just saying. I'm just letting you know what's going to happen. More than likely. I don't see this happening. And also, we have a new presidency, a new administration, and they want things to be very, very smooth right now. Very, very smooth. So you can see a lot of things happening, from changing retail rules to changing minimum account sizes, to doing all kinds of regulations to smooth the markets out. Don't forget about the regulators. We don't see them. We don't think about them, but they're there and they are watching. So that's all I got today, folks. Tell me what you think. Are you investing in GameStop? That's the question of the day. Are you investing in GameStop? If so, drop a comment and the comment below, and I will see you all next time. Kamari Ellis out. Have a great day, everybody. Keep investing now. Bye-bye.